Uh, Good morning, everybody, or good afternoon now, apologies. My name's Thorold Barker, and we are going to dive straight into our panel on the dollar versus the code. I'm going to quickly introduce the panelists. Dr. Jacques Attali, president of Attali Associates, an author and futurologist. I'm going to go to Nicholas Carey, who is third, co-founder and vice chairman of Blockchain. George Bousis, co-founder and managing partner of Protagonist and founder and chairman of Raise. And finally, we have Sergio Fogel, co-founder of dLocal, a payment service. So we're going to talk about the code and fiat currencies and all things crypto. But before we start, I just have a couple of questions for the room. Number one, who owns crypto in any form today? Who's in the room? Almost everybody. And who did 5 years ago? Okay. And we're going to do a poll, which will come up at some point in 5 or 10 minutes when you've voted. Do you believe that digital currencies will ever replace fiat as the primary means of payment? Will digital currencies ever replace fiat currencies as the primary mode of payment? If you could vote, I think you have ways to vote in the audience. So if you could do that, and we will press on with our conversation. I'm going to start with Nick. Nick, you've been in the industry a long time. We've seen, since we first met, a lot of booms and busts in this industry, and we're currently in a pretty healthy place. Is this now a tipping point where this is firmly embedded in the system and it's just upside from here? Is that the end of the turbulence?
I appreciate the opportunity to answer your question, Thorold. I think we met over 8 years ago. We were reminiscing backstage. This has not been an overnight success. We've been building for over a decade in our industry. At blockchain.com, we founded our firm in 2011, so we've been at this for over 14 years. And we have seen eras where we've seen rapid technological advancement, huge amounts of investment, and then new adoption. This era is particularly interesting because there's been, honestly, a tectonic shift predominantly in the policy of the United States government over the past 12 months. And this is going to change the adoption curve and also the institutionalization of digital assets, predominantly first through stable coins, but then next through the tokenization of real world assets, stocks, and many other things that have property rights today that are very annoying to transact with. And so, having worked in this space now for quite a while, we've been witnessing all of this happening and forecasting it, but the speed at which we got here has frankly been a little bit surprising. And I'm very encouraged about where we are as an industry today. It's been built through crucible of difficulties over the past 15 years, but we are now at a place where the market is quite mature.
And Jacques, we talked about how Trump has changed the game in the US very significantly. Can you talk a little bit more generally as to whether governments outside the US have really bought into this, and whether sort of government regulation that has tried to stifle it is now going to embrace it, or whether you think there's still going to be that tension?
Well, this is still puzzling because there are two main issues which are different. One is coins as it is, bitcoins as it is, and the second is stable coins. The most important today, in my view, is stable coins, which is going to be a tremendous change, beginning by the dollar stable coins, which is, if nothing is changed, going to wipe out a large part of the savings coming from around the world, because it will be easy for a lot of people to buy stable coins and to use dollars in the form of stable coins instead of any kind of currency in India, in Nigeria, even in Europe. Therefore, there is a huge challenge for other governments to know what to do with stable coins, dollar stable coins, or are they going to create, or it exists, but to develop euro stable coins and other. This is still an open question, and it's a key question for the future of the world economy.
Okay, no, I think that's right. George, do you want to talk a little bit about why this is happening? You run a business which uses this technology around gift cards. Can you talk a little bit about why the adoption is happening so fast right now? What are the benefits of it?
Yeah, I think there's a few different things. On one side, the obvious one is the consumer benefit, where there's a lot more value that consumers are extracting from the ecosystem. If you think of traditional gift cards, they could do one thing. It's essentially a payment mechanism and vehicle of stored value. Now when you can add smart contracts and tokenized gift cards, they can become fully programmable. So you can add things like custom offers or things tied to events and outcomes that create more value for the consumer. And so I think really who benefits is the consumer on one side and then the retail on the other, because that flywheel creates more loyalty and drives more customers into their stores, and it gives them an opportunity to now create a relationship with their customers. And so as you think of tokenizing a traditional space like the gift card space, one is relationships, two, you look at fraud. Gift cards are a massive industry. A lot of folks don't realize how big the space is, but last year there were $1 trillion of gift cards that were issued. Now it's an industry that's been riddled with fraud. You hear a lot of the headlines around double spend cards, serial numbers that have been stolen. Ultimately, by tokenizing these cards, we can solve all these core issues. Now, on one side, it kind of annoys some of the retailers because they depend on this breakage to drive more revenue, and they earn a lot of money on the float. But on the other side, I think we've convinced them that the relationship with the consumer really matters way more than extracting any other value from the consumer.
And how are they driving that adoption? I mean, have we reached a point of the curve where consumers, I mean, obviously people have sort of played with Bitcoin for a long time, but to what extent are we seeing the actual transactions go into the mainstream with people? What are you seeing?
I think what's happening now is there's this fear of missing out, and it doesn't happen and then it all happens at once. And what's happening with a lot of the retailers are that they're now embedding a lot of this type of infrastructure, and we're seeing it happen in stable coins, but they're doing it now in the gift card space. And ultimately, if this succeeds, it shouldn't change anything. It should only make it better. As a consumer, I don't really care what it's been built on in terms of the technology. I care, does it work, and do I get more value out of it? I asked a lot of folks simply, when's the last time you asked a website who their hosting provider is? It really doesn't matter. Does it run? Does it work? Does it deliver the value that they promise? And I ultimately think that's where success comes from.
So really it's creating the infrastructure where they don't see necessarily what they're using as the mechanism for exchange. Sergio, do you want to come in on this? You run a payments program or a payments network. What are you seeing in terms of that sort of customer use case?
The customers don't care. At the end of the day, if I'm buying something, the end user just wants to tap or wants to pay, and the transaction goes on. Now, crypto is great, especially stable coins, as a pipes, as an infrastructure to make that transaction happen faster, cheaper, and in a more complete way. But a big part that we are forgetting here that I think it's super important is governments. We live in a world of tariffs, of governments with huge debts that they will need to cover, so they will need to tax more, and of geopolitical situations. So the governments, there's going to be a big tension between governments that want to control the flow, especially the cross-border flow of money, and the users and the technology that allows very seamless and very easy movement of huge amounts of money. So there's a very big tension. We cannot forget regulators here. Regulators are going to push back, and the two of them will have to coexist some way or another. The code and the dollar will coexist, and a big part of that will be determined by the regulators.
So what are you seeing in that? Because as George just said, we've seen this huge reduction in regulation coming out of the US and this kind of embracing of crypto in the system. Obviously, there is a disconnect where, if you move money cross-border through the dollar, there's huge scrutiny of that, and there's a lot of steps required in knowing your customer and others as a financial institution, and that is sidestepped by stable coins and other things. I mean, how do you see that developing? Because the US is heading in the other direction right now.
The US is heading clearly in that direction. We operate in around 50 countries. Out of them, most of them have very strict controls over money flowing in and flowing out. and they will not be willing to relinquish that control. So they will find ways to put to extend those rules to crypto. So yes, there's going to be quite a significant flow that goes beyond that, but governments will want to make sure that it's not drug money, that it's not sanctioned money. So again, there's going to be a big tension over here, and as an industry, we need to be sensitive to that and try to calm down the governments and show the information that they require, because otherwise there's going to be a major backlash from the government.
So you are embedding or experimenting with the technology, but you are thinking that regulation is going to continue to be there. It's not going to avoid regulation.
I don't think it's going to be avoided. There is always going to be some flow that goes outside of the regulation. It's happening today. It will continue. But unless, if we really want this to be part of the mainstream, we need it to be compatible with what governments want. Today we're using it for a significant part of our flows, but complying with the regulation, and the place where you need to comply is when converting between fiat and stable coins. So it is more efficient, but I still need to collect information, I still need to report, I still need to issue suspicious transaction reports and so on.
Nick, do you want to sort of come in on that?
Yeah, I think one of the big changes that's happened over the last 10 years is really consumer behaviors have adjusted, and their expectations for how to interact with technology and their money and their entertainment have really moved forward into the technical curve. What we see today is that people are still predominantly earning their income in fiat and spending in fiat, but they're increasingly saving in digital assets and transacting in digital assets. So you're seeing this sort of hybridization between the old world and the new world, and I think that should be expected. Where I predict some things to change a little bit, the posture of the US is basically now, the US government has been persuaded that proliferating digital dollars on the internet on layer 1 blockchains is the preferred path to basically put dollar-denominated wallets in the pockets of every person on the planet. And this is a really big deal, because in the past, it would have been very difficult for someone in Uruguay or Nigeria or Turkey or Brazil to get dollar-denominated accounts if they lived in any of those countries. And we're seeing a flourishing of economic activity using stablecoins in these jurisdictions. One of the things I'm proud of at blockchain.com is that we can serve customers in all non-sanctioned countries in the world with non-custodial wallets. And we're now seeing consumers adopt these things at a very rapid pace, partially because of the harmonization of regulation out of the United States, which has taken a very forward and progressive perspective on this. And frankly, it's an unusual one because for the last 10 years, it's basically been a relatively hostile regulatory environment. And this is one of the only areas of bipartisan cooperation in the United States. In the last election, a large amount of influence was basically created through the legislature, which went through building laws to allow digital asset companies to compete on an even playing field. And now the United States is the new home of digital assets globally. It is teleporting and importing capital, both human capital and real world capital, to build on these infrastructures, and it's very, very encouraging for the US.
So for the US, I see that, and I'm going to go to Jacques in 1 second. So it embeds the dollar. Okay, it puts the dollar in everyone's wallet, which for America is a good thing.
Yeah, the distribution is the most important thing.
Right. So, but for other currencies and other countries, it's not quite as clear cut. So how do you?
Well, it's a global contest. It always has been. And ironically, I think Europe had a big advantage a few years ago. They passed a comprehensive regulatory regime to basically bring everybody into the fold and into the regulated environment called MiCA. It is still now getting implemented, but frankly, the United States has sort of surpassed it very quickly through this legislative agenda over the past 12 months. And so we'll see whether or not Europe can respond to this. I think the United Kingdom has an opportunity to also potentially move forward. But they had some early advantages, and it's a global contest. And we need to see the regulators basically all harmonize or try and create competitive environments to persuade people to come build and move their capital there.
We'll go to Jacques and then George, okay?
Well, people have not yet realized what you say is perfectly true. It's going to be an attempt to resist the so-called de-dollarization of the world. On the contrary, stablecoins is increasing the dollarization of the world through the fact that it has not been said, but stablecoins are backed or backing treasury bills. It's a way to force every man and woman in the world to buy treasury bonds, then to finance the American debt, which means that the limit of the American debt is growing. There is no limit if you can finance it with the whole savings, beginning by remittances. All remittances around the world will go through stablecoins. And more than that, there is a real chance or risk for the rest of the world, including for Europe, that the whole savings of the world will be swallowed by the US to finance an infinite deficit of the American budget through stablecoins. I'm sure that the Europeans have just begun to realize that. There is a discussion between the Commission.
So what are they going to do?
Well,
I mean, because for the US, it's already huge amounts of global flows. It's 60% of global capital markets.
Yeah.
I mean, so embedding that makes total sense for America. What should Europe do to counter that?
Well, many things. First, to make people realize that it's not a safe travel to dollar, because one day an American government, whatever American government, can decide that they tax the stable coins and 40% of that is deleted to finance the American debt. Full stop. End of the story. A decision of that kind could be taken, and it's a threat on owners of stablecoin. The fact that there is a collateral with T-bills. Second thing that the Europeans must do and are thinking of doing is to enhance the development of euro stablecoins. We have also a potential euro stablecoins market not only in Europe but in Africa, in other parts of the world.
Right, but then they need to deregulate, and their tendency is to do the opposite.
No. They don't need to deregulate. They need to regulate euro stablecoins with euro bonds and euro debt. That's not a deregulation.
Okay.
It's another kind of regulation.
Or they need to move faster. How about
Yeah.
that? Okay.
Yeah, I think these are all really important points. Ultimately, what it comes down to is what do consumers want? And I think what it's really rooted in is trust and value. And what's happening and what the world is telling us is that the world wants US dollars. Why? Because of trust in the US market, because it's the largest economy, and because it's the most liquid. And so what's happening is the distribution of stable coins denominated in US dollars is the single largest opportunity that the United States has ever seen right now, right? Because the US dominates the global market if more people hold US dollars. The effects of that now via the Genius and Clarity Act is that all of these stable coins have to be denominated in US treasuries. So what happens is now we're getting US dollars in the hands of potentially 8 billion people that will hold US debt. And so there's a whole bunch of leverage that now exists in that framework. And
US government debt.
US government debt. And I think that's a really powerful thing right now. And Europe's in trouble. And I think they're in for a rude awakening. I think they need to cooperate and figure out a way to create a framework in a regulatory way that protects them but also gives them exposure. But I think every day that goes by, it's turning fatal.
And so just, I don't know the number here, but roughly speaking, what percentage of stable coins are held, dollar stable coins are held in the US versus internationally?
The last figure I saw is that 99% of the world's stable coins are US dollar denominated. It's like...
No, but are they held by Americans? What percentage are held by Americans versus...
Increasingly more and more internationally.
Yeah.
Because what's happening is when you see currency fluctuation or a lack of trust in local governments...
What is important, I don't know if you have the figures, but how much of the American public debt is in the form of stablecoins?
I couldn't tell you.
Right.
I think it's a growing figure.
It's growing.
So this is a takeoff moment for stablecoins, and obviously, their ability to hold value if they're backed up properly and also transact in and out is very significant. Up until now, it's been about Bitcoin. Bitcoin's been the kind of the currency that everyone's known and heard of and speculated in and made lots of money in. What does this all mean for Bitcoin versus stablecoins? Can you just talk a little bit about how those interact and whether Bitcoin remains this focus going forward?
I don't think it's either or. I think it's and they're two different asset classes and have two different purposes. I look at what we see in Bitcoin is what we're seeing now in gold. And Tether has this huge movement right now where they have Tether denominated in gold. And there's a reason, because there's demand and people want gold. They look at gold as stability. There's a lot of economic uncertainty at a global scale. And so ultimately they are creating a product that fulfills a need that consumers value. And this is where I think the broader opportunity is. Now, I'm a big Bitcoin believer, have been for a long time. I think value will continue to accrue in Bitcoin. The interesting thing is stablecoins now allows more people to access Bitcoin as a result of that. So it is a huge beneficiary of it.
Nick, do you think
They're very symbiotic. The point I think that I would reiterate is that Bitcoin has sort of found this use case as a store of value. And Larry Fink opened the conference today and said, if you're concerned about all these geopolitical risks, the proliferation of dollars, the debasement of currencies, fiat assets, well, you have alternatives. And one of the alternatives Larry Fink spoke about was Bitcoin.
I think they're the second largest holder of Bitcoin, is that right?
Yeah, and their ETF was the most successful launch of an ETF ever for Bitcoin last year. And that was one of the big stories of the former cycle. And I think it's just further evidence that consumers are driving preferences and changes. I think Europe is in a tough position. I'd welcome an opportunity to speak more with Jacques potentially about this. But we're already seeing proposals in smaller jurisdictions across Europe to actually start to stockpile things like Bitcoin. In the last century, it was valuable to own property and land and oil and gold. In the next century, it may be very valuable to own some of the permission to settle and clear value over the internet. And Donald Trump's been persuaded about that. Others, I think, are becoming increasingly persuaded. But when I said that they're proliferating dollars on layer one blockchains, that is a really important differentiation. They chose not to centralize this through a centralized settlement and clearing system, and instead to use the utility of layer one blockchains, which is to say decentralized systems for moving precious information over the internet. And in doing so, we don't have to rely on one centralized system to do the settlement and clearing. And I think it's a really big distinction, because it will be very, very difficult to put the genie back in the bottle when it comes to controlling the proliferation of dollars. Now they can literally settle and move anywhere in the world on chain. And there was this big debate here at FII 7 years ago, 4 years ago, 2 years ago. Will central bank digital currencies come into this space and just wipe everything out? They are now slowly, quietly, mostly turning those programs down, because the cost of actually developing a worldwide settlement clearing system that's always on, resilient, can be maintained, is extraordinarily expensive, and they don't need to do that. They can just follow the path that the United States government is pursuing now, use the layer one blockchains, put the euro on it,
So what
put
does
a
that
riad
mean
on
for
it.
I mean, one of the things that government has always wanted is a monopoly over their currency, and the ability as a central bank to control money supply and interest rates and other things, and then from a taxation perspective, to do what they need to reallocate
Well, the
capital.
U.S. taxes on a worldwide basis. The French have a proposal to do the same soon. I think they're going to have.
But under
find
your
ways to
scenario,
detect
they're
that.
going to lose some of that control over.
I mean, you're seeing just different paths. One is to basically speed up the economic velocity of the GDP. If you have a digital currency, you can move money around faster. More money moving around an economy creates more opportunities to potentially tax it. That's going to help the United States. I think like I said, all jurisdictions have to take a serious look in the eye and decide which path do they want to pursue. Are they going to pursue closing things down, making it more difficult for their businesses to transact in an ever increasingly globalized world, or do they pursue openness?
So you do a lot of business in Africa. What's the perspective from there?
I think that if you want to see the future, don't go to San Francisco, don't go to Paris, go to Kenya, go to Buenos Aires, go to India, to Brazil, because, I don't know, most taxi drivers in Argentina today hold Bitcoin.
Yeah.
Because they need. At the end of the day, necessity is the mother of innovation. And there has been a lot of innovation.
But sorry, just before you go on, so they hold Bitcoin instead of a dollar stablecoin.
Yeah, or maybe both, but yeah, there's a lot of saving in Bitcoin, or dollars under the mattress. But Bitcoin is more fun, and everybody today has a smartphone. And then you have things like Pix in Brazil, which is a payment system that has completely leapfrogged everything that is today available in the US. and you have UPI in India, and you have the new scheme in Brazil called Drex, which is their new digital currency that is running a pilot and will be available probably next year. So there's a lot of innovation, and creativity and innovation is not the monopoly of Silicon Valley anymore. So it's worth going there and see it in what's going on in.
So from what you're seeing in those countries, what does this mean for the traditional custodians of the financial system, the banks and others? I mean, do they benefit from this? Do they get destroyed by this? How do you think about it? And then,
I think it's going to be a new generation of custodians, probably because at the end of the day, I mean, it's self-custody is great, but it's very hard, and you always have the fear of losing the keys and so on. So there's going to be custodial services. Maybe it's going to be done by the traditional bank. I find it hard to believe it. It's probably going to be either the current generation of crypto wallets or a new one, more friendly, easier, more friendly to regulations.
Okay, Jack's going to say something, and then I think George. Can we get the results of our initial question? Did we get a result? Yes, 56. Okay, well, let's quickly, before Jacques talks, 56% thinks that they will replace fiat currencies. What do the people on this panel think? Will they replace fiat currencies? Yes? No?
I will come back when I speak.
Seriously, does anyone think they'll replace fiat currencies? No. Fine.
Yes.
Depends on the country, right?
Yeah.
Okay, Jacques.
I see three scenarios coming, and I will tell you which one I think will win. The first scenario will be governments going back as leaders, and central bank come back and say, we win and we lead and we dismantle the whole of the private sector. It will not work. The second scenario I see is the market taking over governments, and then the central bank will be wiped out, and other private sector actors such as Tether or other will be the new regulators of the system. It's the most probable scenario in my view. The third would be a global architecture, both private and public, which, as you said, is very complex to put in place, may come in 50 years from now. But what I see is a muddle through with the private sector winning against the central bank. And it may be very dangerous.
I'm just a big believer in sovereignty, and non-custodial wallets, I think are one of the most disruptive technologies right now. And I just look at what this enables in terms of the ecosystem. The reality is, I don't need my money to be held by a bank. Ultimately, I want to extract as much value as I can. And so, an example is, I may hold a bunch of Bitcoin. If I ever wanted to take a loan in the future, the underwriting process of getting a loan from a bank takes weeks, months, or years. And it's not accessible to everyone. What crypto has done is it's democratized access to better financial tools at a global scale. And so what's happening is, if I want to get a loan against my Bitcoin, I can get a loan within 30 seconds at 86% LTV of Bitcoin. Don't use this institution. The funds come directly to my non-custodial wallet in my phone, and I can use those funds to pay for anything. I think that is one of the most disruptive things. The second example, going to one that we just spoke about earlier, I'll give you a very practical one. Our nanny that we pay back at home. Let's say I pay her $5,000. She takes those funds, sends them to the Philippines. She loses 10% of the value of those funds, and it takes almost 2 weeks for her kids and her family to get those funds. I think that's a crime. At the end of the day, I've taught her how to use stable coins, and I set up a non-custodial wallet for her family in the Philippines. I can send her the money, and it costs pennies to send it. Now her family is able to capture a lot more of that value. And $500, as we know in the Philippines, goes a really long way in terms of groceries, in terms of need, in terms of everything else. So I do think democratizing access to these tools, lowering the barriers, getting rid of all the intermediaries and middlemen that exist in the system that all want their piece of the pie, is changing rapidly.
Which is what Sergio said. You'll see the future in that cross-border and that stability. Nicholas, do you want last word?
No, I think a lot of groundwork has been placed over the last decade. The three challenges for the next decade are going to be scaling this infrastructure for the next 7 billion people. It will require harmonization across interoperability, so you can move from dollars to pounds to euros to Bitcoin, back into property, back into other things quickly. And the last most interesting dynamic that we haven't had a chance to explore today is really how computer systems will actually transact with these digital assets in the very near future. Our agentic AIs that'll be performing activities for us very soon will not be setting up bank accounts, but they can set up wallets instantly online and begin to perform economic activity. And so one prediction I have is that within 5 years, the majority of economic activity happening on the internet will be conducted digitally and will be conducted through AI agents. And will not be surprised if I'm wrong even in how fast that happens.
That is a great place to end. Thank you all very much indeed.
Thank you.
Thank you.